So I'd just like to introduce Malcolm Turner.
Malcolm Turner, yes. I'm
Turner and Mason.
chairman of Turner Mason Company in Dallas.
Excellent, excellent. So I understand you're sort of specialist in downstream US particularly, right?
Well, I like to say that we deal with crude oil above the ground.
Okay.
So no drilling or exploration or E&P type work, which is what this conference is.
Perfect. Okay, so I just want to talk a little bit about downstream sector. We see for the US particularly, there's been a lot of major changes through 2015, namely the lifting of the export ban. And I'm just wondering how this has changed the profitability and the dynamics of US downstream. Is it still as profitable as it was? Is it still as competitive as it was on a global scale?
That's a good point of discussion about the export rules. I was not expecting success for the companies that favored that. I used the argument that the reason they favored it is they thought they would get higher priced oil. If they got higher priced oil, they would have higher priced gasoline and you'd pay more. And you probably wouldn't like that. So I didn't expect them to succeed, particularly under the Obama administration, but they did. They did get it done, but it turns out it's much ado about nothing. Nothing really has happened. There's been almost no exports other than to Canada, and so it hasn't had much of an influence on the cost of crude oil, and therefore the cost of gasoline. Now, it could have a big impact when perhaps you were at yesterday's session and heard me ask Scott Sheffield of Pioneer about producing 5 million barrels a day in the Permian. Well, when he starts producing 5 million barrels a day, the Houston markets are flooded and it has to be exported, and it will be. And therefore, when it's exported, perhaps the price of crude will rise compared to what it would have been if they had no exports at all. So that's a long-winded answer to your question that it's much ado about nothing right now. Nothing much has happened.
Okay, so far no real impact on margins in the US?
No.
Perhaps
you can still buy all the crude oil you need, and we still import some 8 million barrels a day of foreign crude. So anybody who talks about energy independence doesn't know what they're talking about. We're not energy independent.
Do you see that changing at all, though, if you look at the dynamic balance of crude imports and crude exports in the US? So far, 2015, it's been relatively minimal, yes, but I mean, what's the capacity for change going forward into 2017? Do you think those export volumes will increase significantly?
Well, if crude oil production increases as I expect it will, because we're still drilling really very strong, and the wells the number of rigs are increasing. So as the exports of the light, tight crude oil, as the production of light, tight crude oil has increased, U.S. refiners are not currently geared to process that. They several years ago converted to heavy crude oil, heavy sour crude oils, such as Mexican crude, Venezuelan crude, and Canadian heavy crude. And that's not what this new production is. The new production and the increased production is light sweet crude, so refineries have to spend some capital. Now they can do it, they would, depending on the balance of the prices.
Okay.
Do you understand that?
I do, and I was interested to sort of these investments that might be made in order to run lighter grades. I was sort of chatting recently to a consultant, and there was mention of condensate splitters having been developed and established already on among US refiners, but perhaps they're not running at full capacity, even as low as 20%, I heard. I mean, can you offer any sort of clarity on that? And if that is the case, why are they running so low?
If it's produced in the United States, it's run in the United States. So condensate it's a very complicated subject because the definition even of what is condensate is difficult. But I'd say that the condensate splitter is a misnomer in the first place. It's a fractionator, a crude oil fractionator, and the crude oil happens to be condensate. So all of the to-do about condensates is mainly discussion. It's not a fact.
Okay. And if we talk sort of moving back to margins and markets again.
What did you say?
Sorry, turning back to markets.
Yeah.
I just want to think about margins now. If we were to see a sort of rise in crude prices, what impact would that have on US margins? And are we likely to see a pinch as the crude prices rise? There's a lag period in terms of products picking up or catching up, and perhaps we'll see that squeeze on profitability in 2017 as rebalancing starts to occur. What are your thoughts on that?
Well, when I was young, I used to think that the cost of leather goes down. That's good for the boot maker. I wear boots. And so, therefore, the analogy is that if the cost of crude oil goes up, that's bad for the refiners. That's not true. I was totally wrong about that. It turns out that as crude oil prices rise, refiners tend to have higher margins because it's more based on a percentage. They don't really have a control over it because they don't control the price of their feedstock or the price of the products, but others do. And it seems that the allowable margins for the intermediate step, which is refining, it increases as the price goes up. You're getting into my speech today. So,
I look forward to that one later on.
It's really interesting because that didn't make common sense. I mean, you wear shoes, and you'd think that the price of leather goes down, that your boots would be cheaper, or your shoes would be cheaper.
But I pass that cost on to
That's
the
not
consumer,
true.
so I
It's
still
not
make
true
my
on
money on
crude
the
oil
margin.
or gasoline. Margins are higher.
Okay. Let's sort of talk a little bit about risk, and specifically political risk. Some elections coming up in the US shortly, I hear. What do you see as the, shall we say, primary upside and primary downside risks for refiners in the US with the encroaching elections?
I don't think they pay much attention to that. I think that ventures and projects are considered for each circumstance and each refinery, and they try to stay out of the politics. But the truth is, the Obama administration has regulated to the point, and Hillary Clinton will do the same thing. The regulations really impact refining costs, because the more rules and regulations you have to follow, the higher your costs are and the more difficult it is, and it cramps your style. So I think that's the big thing, is that refiners are very concerned about an abnormal increase in regulations. You know, were you at the banquet dinner last night? There was a crowd outside yelling, "Shame on you, shame on you." Well, I'm shocked by all of that. I'm just not used to that kind of thing in Texas. But it's true that the regulatory group wants to keep it in the ground, get rid of oil and gas as energy sources, keep it in the ground. Well, that's not going to happen, of course, but that's the pressures that you see coming from on the political side.
Okay, so the expectation is maybe continued regulation or heightened regulation for a Democrat victory. Would the same be true of a Republican victory as well?
No. Who knows what Donald Trump's going to do. I didn't vote for him in the first election, but I probably will this time, of course. But he has said he would get rid of the EPA, and he'd get rid of this agency and that. He can at least remember the names of the agencies that he'd get rid of. Will he? Can he? When you were a small boy, in fact, you may not have even been born, the Department of Interior, which was the predecessor to the Department of Energy, had 10 people. Smokey Snyder was the head of it. Now what do they got? Thousands and thousands and thousands in the Department of Energy and the Environmental Department, EPA. How do you get rid of all of that? I don't know. I don't know if you just come in and wipe it out, as Donald says, but how is he going to do that?
That's it. So, from a regulatory point of view, we could go in two very different directions, I suppose, in the US. Obviously, climate change being a big issue, and the
Yes.
Paris Agreement, it's all relevant, and relevant specifically to, shall we say, oil demand globally. One of the issues, I suppose, if you look at the transport sector being a primary client base for any refiner, is the encroachment of electric vehicles into that market. I'm just interested to know, from your point of view, what impact are electric vehicles having on the US fuels demand at the moment, and how do you see that changing?
Nothing. Have you ever heard of Robert Bryce? He's a think tank guy. He spoke at the recent AFPM, which is the Refiners Association. He said, electric vehicles are the car of the future and always will be. In other words, and I saw an article today in the Times or something about increased interest in electric vehicles, and maybe they're growing here, but not in the United States. It's pretty impractical, and I don't think that the industry should concern itself about the encroachment of electric vehicles. Now, if that's by decree, as I saw somewhere recently, that would require all new houses be built with a charger, and you have to, and if they keep subsidizing, the only reason electric vehicles are sold at all are because of subsidies or because of pride. You may have one yourself and you may like it and feel really special and that you're helping the environment, but of course the electricity that you are using is coming from somewhere. Unless it's nuclear, it's contributing to the problem. So I don't think the overall measurement is significant, and I don't think the electric vehicle is really a threat to the oil industry.
It's a fairly bearish outlook in that case. Would you have any advice for Elon Musk going forward?
Don't buy electric vehicles. If yeah, sure. If you want to pay a whole bunch, we had a guy in our office who he's really an optimist. He was 80-something years old, and he bought a Prius, which has, according to my secretary's calculation, a 13-year payout. It turns out it's longer than that because of lower gas prices. But he's 80-something years old, and he's buying a 13-year payout automobile. You don't want to do that. Most of you and us want to have a quick payout, and if you buy something, you want to get a good return on it in a hurry before you die.
There you go. All right, Malcolm, thank you very much for taking the time to speak to us. Appreciate it.
Okay, thank you.